What's good? I'm breaking down a trade idea I have on NZD USD. So start on the weekly time frame. First clear out all of this. view. So what you notice on the weekly time frame, let me remove this one. I'm not using it. So what we notice is that we are experiencing bearish price action. What do you mean by that? In market structure, this is a lower high, this is a lower low, this is a lower high, this is a lower low, this is a lower high, this is a lower low. And the whole of this swing leg, the whole of this swing leg is our lower high. So we're expecting what is to be expected. After this lower high, we should expect a lower low to the downside. So all of this swing leg is all happening so that this lower low can be formed. Let's delete that. Let's drop to the daily time frame for clarity. Uh, Let me set up. So what we can notice on the daily time frame is that this move here, this move took out all the liquidity which is resting here. All of this was liquidity. So this move has taken it out. So as a result, we're expecting the market to come back into this move. After taking the liquidity, it also broke structure to the downside. There we go. So there's a supply zone that sponsored that sponsored all this price action down here. So for us to refine that supply zone, you can take this candle. And you can see the market is back here. So what is currently happening is that we're forming the swing leg to the downside. Is this, this, and this. So let's roll this. So after the market tapped into the supply zone, structure collapsed to the downside. You can see the market taking out these lows. There's a break of structure along these lows, break of structure as well. So the same thing that happened here when market took out all of this liquidity is what happened here again. Notice how the market came here, took out all of this liquidity down here, all of this, then used the supply zone that here. So after market took out this liquidity, broke structure to the downside. So after a break of structure, what's expected? After a break of structure like this, pullback is expected to further this swing leg. So what is our final target? Our final target is here. What else can we see happening? Let's drop to the okay. The two zones which we have okay, I already marked it out. The two zones which we expect market to react from is from here and here. And I'll show you why I chose those zones right now before our time frame. Excuse me. This zone here, this particular zone, why I chose this zone is because it took out liquidity from here. If you want to refine it aggressively, you could drop into that last one. This second zone did something similar. Took out all of this liquidity here, dropped. So we're expecting a pullback into one of these zones to continue the bearish move. That from here or here. That's the outlook for this week. That's one pair. I could go over my remaining pairs. Why not? Let's move on to the pairs on our red list. There we go. Let's start with GU. NZD and GBP USD, similar analysis. They both move the same way. But I could also break it down. Go to the weekly. So on the weekly time frame, price is actually bearish. I don't know why my. How do I know that? Let's investigate market structure. Here we have a higher high, we have a higher low. We have a higher high, we have a higher low, we have a higher high. Market comes here, changes structure. So we're expecting this is the pullback, and we're expecting lower pricing. This is where we confirmed that our switch structure. Okay. So if you draw your Fibonacci from swing high to swing low, another concept which I use. If you want a video concerning this, drop in the comment section. I'll make it. So I have different Fibonacci settings if you're interested. So we could talk about that some other time. So you can see that the market pulled into this Fibonacci setting, and this Fibonacci setting, let me expand this screen. This Fibonacci setting just happens to align with the supply zone here, mark the whole thing. And that's what price is currently reacting from. We're currently on the weekly time frame. So let's drop to the daily time frame to refine the sorry, 24 hours. I'm not on the premium trading view, so I'm on the free trading view. Okay, my analysis is back. So if you remove this, what you can see here is daily structure. So this one, this line, let me mark it to be red. Okay, let's leave it at purple. This purple line, what do you want to eat? And you can eat anything you want now. Anything. Sorry for the break in transmission. So what we have here is bearish market structure. So this bullish daily structure which was here was just a pullback. I don't have to mark it out, but okay, let me just go ahead and mark it out. Uh, higher low, higher high, that's a higher low. So this is a higher high. So the fact that we have tapped into this higher time frame structure and refined it into this, and the reason why I chose to refine it here because this was the last zone that swept liquidity right there. So what we could expect from here now is lower prices. And if you investigate, we're still bullish. The only way we can confirm this bearish leg is starting is if the market takes out this low. So that's what we have. The supply zone that could help us do this is right here. That's the supply zone. This smaller one, I already refined it, so if you drop to the 4 hour time frame. Oh, this is scenario I already drew. Scenario 2. I'll share scenario 1. So on the daily time frame, on the 4 hour time frame, like I said, we're actually still bullish. We only confirm it if we take out this low, which I think will be taken out. And the reason why this demand zone is here is because that's the only unmitigated demand zone. What do I mean by unmitigated? It's the only demand zone that has not yet been used. Excuse my voice. Notice how here, okay, notice how this demand zone was used here. This one was used. Like basically, all the demand zones in this region have all been used except this one. So what I think is that this one is going to sponsor prices into the supply zone to continue the bearish pullback. Sorry, to continue the bearish trend. Excuse me. So what we could expect here is that for price to come here, react off of this supply zone and confirm the break of structure. Or remember I told you price is not yet confirmed bearish. We could still go higher. What we could see is the market doing this, coming back here and continuing deeper into the supply zone because we have not confirmed the bearish move. Example here, this place right here, let me mark it out here. This was a swing low and this was a swing high. All of this was internal structure. Internal structure. A lot of people who don't understand market structure, when the market broke down here, they thought the market had switched bearish. This was a retest to continue to the downside, but that was not the case. The market was still extremely bullish. Your understanding of market structure determines like how accurate your analysis will be. So in order to not make this video too long, let me see, already 13 minutes long. So to not make this video too long, these are the remaining pairs on my watch list. One, two, three, four, five, six, seven. If you took any value from this video, like and subscribe. And if you want to get the remaining of these pairs on my watch list, I'll drop the Telegram link below so you could just go there and get your I send my analysis there. I don't want the video to be too long. So you can just go there, check out the analysis on the free Telegram group. Cheers.